welcome everybody to this Hardman Investor Forum. My name is Keith Hiscock and I'm the Chief Executive of Hardman Co. These forums give investors the chance to hear a company's or a fund's investment case and question the management. Okay, so our next presentation comes from Fulham Shore. Fulham Shore is a business that you may not know it as such, but you will know its two restaurant brands, Franco Manca and Real Greek. The team behind Fulham Shore's had a very successful track record in the restaurant trade, and I think both of these propositions are slightly unique. You've got up there the charts that shows it's got a good following in terms of shareholders. The share price chart, obviously, like everything else in the hospitality sector, took a real bath as the pandemic hit, but has now recovered substantially beyond where it was at the time that the pandemic hit in terms of share price. But I think probably David's going to tell us that the pandemic's opened up some tremendous opportunity for them in terms of being able to grow the business and the number of sites. David, over to you and Nick. David Page is the chairman. I should have introduced him. Nick Wong is the finance director of Fulham Shore. Gents, over to you.
So this is Fulham Shore, which is an AIM market company. And we currently have about 76 restaurants. And we're opening restaurants quite quickly at the moment. And we'll increase that opening program over the next year or two. So we founded this company in 2012. We floated it a few years later. And our object was to look for scalable businesses that were really good value for the customer and had great food. Nick, who will come along later in this presentation, is a relative new person to the team, and he's been with us 15 years. But I've been involved in restaurants for 45 years in the UK, and a lot of this team with me built up Pizza Express, and then they built up Gourmet Burger Kitchen, and we sold them each time. Currently, we're capitalised at about £110 million. But the point of this presentation is to hopefully explain we're just about to take off in terms of expansion, because we have survived and then we're now back into profitable mode after the coronavirus pandemic. So as I say, we were looking around for two or three businesses that we were going to put into this company. And we bought Franco Manca when it was 11 strong, and we're now 56. We bought the Greek when it was 6, now 20. And as I say, both businesses are about to accelerate their opening program for reasons we'll come on to later. Our idea is, or was and is, to make a success of these restaurant businesses and then replicate them throughout the UK and now abroad. We try and avoid a chain mentality that infects a lot of businesses when they get to scale. For instance, we avoid this by each restaurant has their own profit share scheme, and they effectively compete with other restaurants in the group. So we're adding shareholder value by incentivizing our staff and keeping our prices low. We test our prices against our competitors every month, and we intend to keep our prices at least 20% below our competitors, and therefore not only this drives customer volume through the customer numbers through the restaurants, but they come in because the food's better than our competitors, or we like to think so anyway. So as you can see on the graph on the right, we slowed down a little during COVID, and we're now accelerating again. But of course, we'll come on to in a minute what happened. But we were throwing off cash. This is a business that throws off cash the whole time, even during COVID. So we will explain later that we have eliminated all debt. And when we switched during COVID to delivery only, although our Greek business lost money, our Franco Manca businesses, some of them were twice as busy as they normally were, with much less staff. And so we made quite a lot of profits during COVID through switching to delivery. We wanted businesses that had a low price point for the customer, that were cash generative. For instance, the return on capital we look for when we open a restaurant, both businesses, is over 30% payback. So our payback is 3 years. And each business is trading extremely strongly at the moment. We think in the UK, we are Franco Manca, which is at about £12 a head for the customer and £10 for us after VAT is normalised VAT is taken off. We think at that price point we could probably have 200 in the UK, and we've currently just got just over 50. And we think the Real Greek, which is currently 20, could probably go to 50. So there's a lot of room for a rollout in the UK, let alone abroad. We have all been together for many years. We have been involved in other businesses. We know how restaurants work. The board, have around a short 40% of the listed company. So our wealth and shareholders' wealth are aligned. And Mr. Wong will come on to later the finances of the company over the last year or two and currently. We are now in a very good position with cash in the bank and very profitable. So we did have plans for a dividend policy before COVID, which we shelved, but we're now re-examining that, and we intend to look at it very carefully in a very short space of time. Just on that, our half-year figures come out week beginning the 6th of December, so in a few weeks' time. And the bottom point there is that historically, this sector has been very attractive to private equity and VC because they understand a rollout program. Restaurants are a very easy business to understand because you take the cash in and you pay the suppliers a few weeks later. You can immediately test the return on capital from the volumes the restaurant are doing, and you can see the margin in the business on a weekly, if not daily basis. So it's a very easy business to analyze and understand and to invest in the successful ones.
Right. Hello, everyone. So Franco Manca is an award-winning Neapolitan sourdough pizza business. We make all our sourdough pizzas in-house. All the dough is made fresh every day by our pizzaiolo. We now have 56 Franco Mancas across the UK. We had actually 53 at our last year end in March 2021. And our long-term ambition is to grow this business to over 180 Franco Manca pizzerias in the UK. Fulham Shore has grown this business from acquisition at 11 restaurants to now 56 in these 6 years. And Franco Manca has been very well received by our customers, and we've won countless rewards. We won a recent one that's not in the slides just yesterday from the Peach Awards. We're growing the customer base with the new openings, and we get lots of favorable reviews. And now we serve over 100,000 pizzas a week. And even very simple things like dips that accompany our pizzas, we're selling £1 million worth now a year. Our London suburbs and the regional pizzerias have been trading especially well since the lockdown ended, particularly because commuters have been working from home, and the whole dynamics have really changed since March 2020. We do now have one pizzeria in build, which is in Baker Street, and that's due to open in a couple of weeks' time. And we have plans to franchise internationally. And in fact, we mentioned that we signed a new deal with a company, a very seasoned operator in Greece, to open 6 new restaurants. And we'll come a little bit more onto franchising in a few slides' time. One thing to really sort of mention is that we've really embraced technology in Franco Manca, and we've built a loyalty app, and which we launched only a few months before the pandemic hit, and we've now grown the user base to over 250,000 customers, up from 110,000 pre-pandemic. And this mechanic is very simple. It allows the customers to earn stamps for the visits that, whether it's dine-in or delivery or takeaway, they can earn a stamp for dining with us. Our website traffic has also increased 20% over the last couple of years. We have a lot of new revenue streams as well, including the pizza kits, gift cards, merchandising. We've also embraced a new technology, virtual queue, which we are using in Scotland at the moment. And obviously, our openings are driving a lot of the web traffic. I've mentioned about the virtual queue just now. It's encouraged a lot of customers to join without having to make bookings, and it helps manage the queue outside the front door. All of this feeds into a single customer view, which gives us a very good insight into what our customers are doing, what they need, what they enjoy most about their experiences, and it allows us to personalize promotions and, of course, in the long run, target and reactivate lapsed customers.
Okay. Our second business is The Real Greek, which now has 20 restaurants. The Real Greek costs a little bit more to build than a Franco Manca, but still has the same rate of return, payback in 3 years. So over a 30% return on capital we're aiming for. It's very popular with the public. It's slightly busier per store than Franco Manca. They're bigger, and they're in shopping centres where there's a higher footfall. And our ambition is to get up to 50. We're just about to open 2 in new Real Greeks in Kent and Manchester, at Blue Water and the Corn Exchange, that will open before Christmas. And we're building a pipeline around the UK. Very busy, very popular restaurants, and we launched a grocery shop as well in February 21. The Greek was not set up for delivery when COVID struck, so actually lost a little bit of money during the COVID period when we were having to close. But Franco Manca made up for it, and that's why we come to the cash generation that Nick will talk about in a minute. In both our businesses, on the next page, we've got some fantastic staff who've been with us quite a long time and have moved with us from the various businesses that we've owned, where they have short and long-term incentive schemes. Half our staff have shares in the business, we believe, as a result of a gifting mechanism when we floated. And we're always looking to incentivize staff, particularly over the last few months, where we actually, because our sales are so strong, we put out various announcements to say our sales, group sales, were running 20 to 30% ahead of 2019. And this has enabled us to put up wages quite a lot. And this has reduced our vacancies. So we are now the highest paying people in the sector, we think. And that means that our competitors are getting very cross with us because we're paying our chefs a lot more.
Yes, these are quite historic now. And as David mentioned, our half-year results are coming out at the beginning of December. So a key measure in terms of our financials in the year is that our net debt number has significantly improved. We started off the financial year with £9.5 million worth of net debt, and we reduced that down to 3.6, despite us going through the pandemic. We started the year in lockdown at the beginning of April, and we had just 43% trading time during that financial year without restrictions. So it was a very different year than normal. We did, however, manage to open 2 Franco Manca's Pizzeria in that time, and 1 Real Greek restaurant as well. Just to cover off some of the numbers, Obviously, revenue was down as a result of the closures and the restrictions on dine-in trade. However, it was a very varied year, with the first quarter being closed, the fourth quarter in full lockdown, and quarter 2 and 3 we were trading very well with both dine-in and delivery and takeaway. Since the year end, we've opened 3 more Franco Mancas and 1 Real Greek in Norwich. We are now in a sort of net cash position. I'll take you through our banking and cash position on the next slide. Our funding at the moment, a couple of weeks ago, we negotiated with our bank, HSBC, and we repaid our CLIBO loan, which we took out during the height of the pandemic. So our banking facilities now is 17.75 million, which is made up of a new RCF facility, a 3-year term, and an overdraft facility of 0.75. By refinancing, we have removed all restrictions that previously existed with our CLIBO loan, which allows us now to really focus on our opening and growth programs in the coming years. Our covenants, again, very historic now. We had covenant waivers in place up to September 2021, but in fact, from June onwards, we've been passing all our covenants, all our covenant tests, and hence the refinancing. Our net debt, as I mentioned, has really swung from the £9.4 million to a positive 5 million today. And of course, that really shows the cash generation of the 2 businesses. And as David mentioned, it's very cash generative running these restaurants. And when we're not opening, these cash accumulate over time.
Our property costs are falling in new stores. Landlord contributions are now being made to us. We've opened 1 Real Greek restaurant for nothing, which is an old Carluccio's. It cost us £200,000 to renovate from Carluccio's, but the landlord gave us all the money. And so we've opened it for nothing, and it's taking over £30,000 a week, and will probably contribute nigh on £400,000 or £500,000. Quite an amazing return on no capital. The average capital cost, as I mentioned before, is about £650 for a Franco Manca and £750 for a Real Greek. Once again, as I said before, we're targeting a 3-year payback, and that's what happens on average. That can be boosted, as I say, by landlord contributions. And as Nick has said, we have now got a bank arrangement in place, which means with the cash we've got in the bank, we've actually got a £20 million headroom, which is enough to actually grow by 30 or 35 stores a year, which we're not going to for a couple of years. International franchising on page 13, we've signed in Greece. We're going to open in a couple of other territories abroad. The real big ones we're going for will be Germany, France, and Spain, and Japan. Some countries that have a proper property system and have opportunities for us to open 50 to 150 stores in each one. So those are our major plays in terms of franchising. Franchising won't contribute very much for the first year or 2, but it'll be a boost to profits going forward after that. Current trading, all the restaurants are reopened. They're very busy. London's centre restaurants and office locations took a bit of time to get going, but now they're in positive territory. Baker Street is being fitted out. That'll be 57 Franco Mancas. We're just about to, as Nick and I said, bring out a half-year figures in early December, which we believe will be well received. And that's with only 10 weeks out of 26 trading properly. We've got lots of sites in solicitors' hands to push up the opening program. We're going to do around 10 new ones this financial year, maybe a bit more, and we'll probably try and double that in the next financial year. We've got net cash at the bank at the moment. We've repaid our CLIBO loan. We're well funded. We've got 2 great businesses that are very popular with the public, queues at peak times, and we're starting to go international Nick and I have been involved in international franchising before at Conway Burger Kitchen, and myself with Pizza Express. I've operated in about 10 different territories abroad. So we're a well-funded company, and we're really enthusiastic and proud of the two businesses that we own. And there's a little map at the end to show everybody where we are. We're London-centric at the moment, but we are spreading all around the UK.
Right. Hello. Thank you very much indeed, David and Nick.
Richard.
So we're going to go on for a few questions. There seems to be a certain amount of concern in the audience that we're going to get another lockdown. Now, I don't know how this is playing into your planning, but either basically you say you've got a very strong direct delivery system that you've now tested and learnt about, or basically the bad news isn't as bad as some people think. You've got your restaurants open and you're paying more than the competition, so you've basically got no issues. Is that a fair summary of where you stand? But as a team, if you had to sort of hedge your bets a bit, what do you think the chances of another big lockdown or problem could be next year? Or are you basically very optimistic?
Cautious, like everybody else. I don't know, Mr. Wong might want to answer, but I can't see them doing a full lockdown. It will be lockdown for people who haven't been vaccinated, like every other country is going towards. This is my view. But in lockdown, we were pretty astonished at how well our restaurants did. As I said, some of our restaurants were twice as busy than in normal trading, just doing delivery, but with only 3 or 4 staff. I'm not sure Boris and Rishi will go for a lockdown because they'll have to pay another lot of furlough. I'm not sure they're up for that. Nick, I mean...
Yeah, absolutely. And I agree with David. We've been trading very well through lockdowns. In fact, the only time that we were fully closed was the first couple of weeks of lockdown, and then we would have been able to do delivery and takeaway across most of the estates, and they were profitable. And the whole team is now for a season at dealing with whether local lockdowns or a countrywide lockdown. So we are ready if there is another one. As we've shown, we're still able to open new restaurants during the lockdown. And of course, with this business, because it's so cash generative, we can always slow down the openings to ride out any sort of temporary restrictions that the government may levy.
Okay, so another question is, obviously the restaurant sector's been hit very badly during COVID. How many walking dead are still standing in the restaurant sector that you think over the next 6 to 12 months may disappear? And that would then tie into another question, which is your expansion plans, certainly in the UK, are very ambitious before we even talk about the overseas ones. Are you absolutely convinced there are enough staff available to be able to staff these units as and when you open them?
When you're running an expansion program, you can't go hell for leather straight away. Our previous experience with Express was we accelerated. When we floated, I think we did 7 and then 14, 21, 28, 35 every year. And that's what we'll be doing here. We'll be doing 10 or more this year and then maybe 20 the next year and then more after that per year. We are paying the best in the sector, so our staff vacancies have gone down dramatically. We're pinching our staff from other people who are getting a little bit upset with us. But we are, because of our sales. I mean, we've put out that our group sales are 20 or 30% ahead of 2019. With those sort of sales, you can afford to pay people more. And your question was, how difficult is it for the opposition? I mean, it is very difficult. They can't get staff. They can't open the restaurants. They put notices up in the window saying we're closed today because we can't open staff, or we don't open at lunchtime. We don't have that issue because we're paying the best in the sector. We pay under 25s the national living wage and above. So we are very popular. And as to capacity coming out of the sector, which you asked about, we think at least 20% capacity has come out of the sector. And the real crunch date for, I can't remember, did you say walking wounded? Something like that. Or living
Something
dead.
like that, yeah.
Walking wounded.
Dead.
Will be Nick will confirm, it's March or April when when all those government reliefs have sort of come off at once, there's a protection for the landlords that finish in April next year. There's the rates issue and things, and these walking wounded or whatever will fall over, or more of them will fall over in March 22, I think.
I've got a very specific question here about Greece from Stuart. The recent announcement that Fulham Co will start a franchise in Greece is good news. However, as the directors have independently bought 10% of this franchise, do you agree that there could be conflicts of interest for board members being involved as both a franchisor and a franchisee? Would it not have been better for Fulham Shore to have bought these shares in the new franchise instead?
Well, as you can imagine, that was considered. The franchisee wanted an investment from the UK, but the board, franchising and investing in the equity are two very different things. I mean, I used to be the major franchisee of Peace Express, and we franchised in many countries around the world with different brands. JVs or minority investments is something I think we should avoid as a company, because the risk profile is just completely different. Saying that, I mean, and also the size of the country is quite important in the terms of the decision. If it was Japan or France or Germany or Spain, the company might consider a carry. But I mean, you're a minority partner, so it comes with a lot of risk. I mean, the best route is franchising. This great franchisee wanted some extra encouragement from the UK, and the board didn't really want to invest the board's money because it's too risky. So the halfway house was a couple of the directors investing. Nick, I mean, I think that's about it. I mean, we wouldn't not consider investing as a main company in a franchise abroad, but it would have to be pretty special to deviate from the franchise model. You can always put in the franchise agreement as an option to buy if the company wanted to get involved. But once again, it would have to be a big market for us to be really interested, to push the needle, if you see what I mean. It would have to be one of those big countries with 50, 60, 70 million people.
Okay, I've got several more questions. I'm not sure we're going to have time to go through them all. So very, very quickly, do you offer staff a training program? And is that critical to ensuring that you have a supply of adequately trained labour in the future?
Mr. Wong, yes, we do. Mr. Wong, yes. Over to you.
Yeah,
I'm hogging the limelight here.
We do have a training program, and in fact, since the summer, we have invested heavily in training because the skill sets of some of the staff members have changed over the lockdown. So we've invested in more training for all new joiners and also existing staff since returning to work. And it is critical that we continue to train our staff because the world is changing day by day, and our systems are changing day by day.
Right. Okay. Do you see any menu pricing upside in either Fulham Co or the Real Greek over the next 12 months?
Yep. We've got away with very marginal price increases over the last 2 years, maybe 4 or 5% over that period. Costs are still rising, but as I said earlier on, we are because of our very large volume increases, we are managing to mitigate that, and our margins are, I'm not sure what I could say, but our margins they're not as under pressure as presumably other people's are, because we've got these fantastic volume increases in the two businesses. Our wages, we put up a lot. That's the main the pressure point. Food costs and property costs are either stable or marginally better for us, because as you grow, your food costs shouldn't really go up because your suppliers are getting more business from you, and so you can negotiate better prices or keeping the prices the same despite the currency fluctuations and their increased costs, but they know they're going to get more business from you. So when you're expanding a business, it's very helpful to negotiating food input costs. It's the wages that is the main cost increase.
Right, so I think we'll finish on the last question, which was, when I was younger, there seemed to be a lot of Greek restaurants in London, and people found that Greek food was incredibly popular, having gone on holiday. Is it not true that the market could support a larger base of the real Greek than the numbers you've mentioned in the presentation? I think it's 50 in due course.
I think we didn't predict 50 even a couple of years ago, but our new openings in Bracknell, Norwich, Bournemouth are absolutely flying. So we've said 50, but you're right, it could be some more. You said they were popular, but can I say that the food maybe wasn't as brilliant as it is now? If you go to Greece now, as I do, and we all our suppliers obviously are in Greece, and we go and visit them and go out to restaurants. The cuisine in Greece has just completely changed from 30 or 40 years ago. I mean, they've got some absolutely fantastic restaurants, and their cuisine is off the charts. So we, in fact, in the Greek this week, we've got a 2-star Michelin chef and a 1-star Michelin chef in our training kitchen, working with our chefs. So even within the very successful business like the Real Greek, we're trying to improve the quality of the food all the time. So you're right. Maybe we come to 30 or 40. We think that we might push the target up in terms of number of restaurants in the UK. But we're saying 50 for now to not disappoint people. Really.
Okay, I've just got one last quick question that's come in. As the company is basically focusing on two names at the moment, is it unlikely that you will introduce a third brand, i.e. a different food culture, into your business model?
Mr. Wong, I think we might add on. We have talked over the years of adding on maybe another pizza business, so we can benefit from buying, which any business that we buy might not be able to lock into that at the moment. But Mr. Wong, I mean, we're not looking specifically for a third business or anything. Mr. Wong, would you agree?
We're focusing on the two, but we will consider either site packages or potentially another pizza operator to bolt on if that comes across our table.
Okay, gentlemen, thank you very much indeed. It's been great chatting to you.
So that concludes the presentations today. I'd like to thank our speakers and you, the audience, for attending this forum. Thank you very much.